By 2047, our chief economic advisor has said we should go to a $20 trillion economy. Of course, that global growth has been slowing down overall. So my left chart here has two charts actually. One is what is growth in the large economies of the world. So for that I will look at US, Japan, Euro area and the United Kingdom. And then what's happening with BRICS, Brazil, Russia, India and China. So you can see over the last 20 odd years, growth has seen two dips, where one was the global financial crisis, second was the pandemic. You will also see that growth in the emerging markets is clearly higher, and this is a theme I'll keep coming to over and over again. What we look at today in the morning, ki bhai US market kaisa gaya, that is something will eventually change as emerging markets will contribute more and more to the global GDP. That's something I wanted to say. And I will come straight away to the manufacturing PMI. Now this is a sort of a forward-looking indicator. It basically tells you what people are feeling about how the last previous month went. This is very, very current data. And PMI indicator kaisa hota hai ki if it goes above 50, then you say that you're feeling good about the economy. You've done better this month than you did in the previous month. And if more of the people say like this, then the index is above 50, otherwise it's below 50. That way it's very easy to understand what a PMI is. आप लोग यहाँ देखिए, if you look at 2020 onwards, look at the pandemic, barring India, every other country has this big drop. Every country has this drop. So pandemic effects were there, apparently not in India. There was a small drop when we had the first lockdown here. I don't know if, yeah, you can see the mouse here. This is the first lockdown. After that, sab changa si. That's how it has been in India. But look at everybody else. So this is the inherent strength that the Indian economy has. I just wanted to juxtapose two thoughts here. And this theme will again come again and again in my deck here. What's happening with the world again? US economy is holding up. It's holding up better than anticipated. We've had severe inflations, as you can see here. Global inflations have been the highest in 20 years in all the major markets of the world. Now we are seeing inflation coming down. But usually what happens with inflation rising is that central bank raise rates. And central banks raise rates, growth comes down. We look at a recession. But we've had the world's largest economy today, not in a recession, and yet inflation is coming down. So that's an interesting period. US growth is at 2.4%, which is very far away from recession. Yet US inflation is coming down to 3%. Actually, US inflation today is lower than India's. That should tell us something. My theme about how important Indian markets are, how important emerging markets are, and how important emerging economies are. See, when I compare myself to many of the investors in this room, I can look at only 2 decades. See, I only started in the markets about 99-2000. So for many of you, I must be a just bacha. 25 saal hi to kiya hai. That's not a big deal. But I can tell you this, when I started in the markets, emerging markets were around 13% of global economy. 13. Developed markets, even though they had 1/5 of the population, they were about 87% of the economy. Now look at this chart here. This is about 2004, 80%. So I started a little bit before that. So that was about 87%. Over the years, this has come down to about 57% today, over the 20 years. What has happened with emerging markets? They have gone from 13% to about 42%. And what are we saying? These are IMF projections. Over the next, by the end of the decade, emerging markets will come pretty close to developed markets, developed economies. What does that mean? So you have higher growth, which is here. Emerging markets today contribute much higher, and it's been for a large time, much higher to global GDP than developed markets. At some point, as I think one of the audience guys said, we should have US people coming for visas to India because the opportunity will be here in India. This is something in numbers. And across the emerging markets, across developed markets, look at the numbers for India, ladies and gentlemen. You can see that in 2022, India was the world's fastest growing economy. And even this year, the numbers are 6.1%. There is no one here which is close. Some of the countries are actually higher. Saudi Arabia, which is a much smaller economy. So India will remain one of the world's fastest growing economies for a while. And even next year, our number is 6.3%. So this is where the tailwind is for India going into the third year of our 20s decade. What's so good about India? Why should we like India? Look at this. GDP projections, I already said. Inflation, unfortunately, inflation in India right now is high. It is the highest among all of the countries that I'm comparing with. But we know what's happening there. It is very, very temporary. Right now, tomato is expensive, super expensive. So, like I've said here, veggie prices have pulled headline inflation higher. But we know that this is short term. We know that this is not likely to change the central bank's view for the moment. If you look at core inflation is under control. And now look at the third part. We also heard someone in the audience point out that Indian currency is depreciating at the moment. So, if you hear central bankers, they're not interested in the direction of the currency. You keep hearing them, they're not interested in the direction. They are more interested in how volatile the currency is. If a currency is less volatile, if it is stable, whether you are on the export side of the trade or import side of the trade, you can manage your businesses better. Now let me show you this presentation here. That thick red line is Indian currency's volatility, not direction. And you can compare it with any of the others. So our currency volatility is the lowest. This is a mark, this is an underline on how currency is managed in India, how currency is taken up in India. Our forex reserves, as you know the news from yesterday, it is above $600 billion. So when you have sufficient FX reserves, the currency volatility also comes down. Markets do not take your currency for granted. And I have the numbers here for you, people. Other things for India that go out in terms of services exports, our numbers are going up. We keep looking at, when we look at trade, we look at, we are ordering, we are importing so much of crude, either from the Middle East, now last 2 years from Russia. We run a trade deficit, we run a huge trade deficit. Think about services exports. Let me just tell you one number. We import about $180 billion of crude per year. Do you know how much we do in services exports? Any numbers? So it's slightly higher. I heard 140, slightly higher. So in FY22, we did 250, sir. In FY23, the number is 300 plus. So that's the kind of numbers we're doing on our services exports. So, one of the things that we keep doing now is not just look at merchandise trade, look at overall services, look at overall trade. Now think about it. I mean, if crude is so volatile and we are importing so much of crude every time, our currency should be on a steadily depreciating tenor, but it's not, as I've seen in the volatility here. The other thing about India, every country has higher external debt to GDP. Look at our emerging market peers. India is about 18.9%. And of that, what really hurts your currency is short-term external debt, 3.9%. These are the other countries. And then, so our government does not borrow from abroad. It borrows largely from household savings. If you break up what percentage of our government borrowings are from outside, 20 years back, it was 16%. 7%. Right now, it's just about 5%. So this is our dependence on the world. We don't really, world can have a lot of, and 2022 has shown that a lot of turmoil has happened in the world last year. We saw interest rates go up significantly. We saw a war, which saw commodities going up and down. And yet, India did not see too much of pain. I'll show that in marketing, in the market stuff as well. Importantly, when you look at even domestic profile, importantly, what is happening is our debt is becoming longer and longer tenor. So you will have no short-term impacts on interest rates, even in India, on the debt perfect. Now, I'll just go quickly on some market stuff. So this is a return quilt. This is something that we keep showing. What it basically shows is, why should an investor look only at India? They should look at global assets. And when you compare global assets, we've shown them from 2013, and these are annual sort of returns. So, for instance, this year Bitcoin has gone up 60%. Wow, what a great year for Bitcoin. But last year Bitcoin fell 64%. Now you're with me. These are the sort of numbers that we are showing here. I wanted to point out 2022 here. So in 2022, global interest rates went up the highest since the late 70s, because you had inflation in the US at 9%. And the last time you had such high inflation was in the early 80s. So that meant most of the global markets fell this way. This is what happened in 2020. What was so different about India? And by the way, if I'll come about FII flows. Last year was the year when FII sold off the highest amount they have ever. We have FII data in India available from 1991. Okay, last year was the year when they sold off the highest amount ever. But अपना market तो गिरा ही नहीं. It went up 5%. Look at what happened in global markets. It's all. Everybody was down. So the story is retail investors. Yes, people like us in the room. We have started putting in markets, capital into the markets at an increasing level. This is how Indian markets have been over the last 10 years or so. So we have started showing good returns now because we have a new participant in the markets, our own markets, retail investors. This is Nifty performance. I know everybody knows this. I just want to point out just one part here. How big are our companies growing? So we heard, Megmani sir saying that how they started from 8,000, 16,000 to about 10,000 crores. Sir, congratulations to you. Again, sir. Yo. I just wanted to say, if you look at the Nifty 500 companies, just 5 years back in March 2018, they made PAT, profit after tax, combined, all 500 companies made 3.6 lakh crores. Okay. Last year, FY23, that number was roughly 11 lakh crores of profit after tax. This is the size of our country now. When the top 500 companies are making 11 lakh crores post-tax, think about the tax that they have actually paid. So when we see GST numbers every month going, last couple of 1 year back it used to be, or 1.5 years back it used to be 1 lakh crores a month. Now 1.5 lakh crores is normal. This is direct taxes. If these companies are giving you around 11 lakh crores of PAT, that is the advantage for our markets. That's the advantage of the earnings potential for these markets. And investors are rewarding India. I'll simply look at this. This is the Nifty 12-month forward PE. Again, these are consensus valuations, not specific to any kind of member. These are consensus valuations. Indian markets are typically at one standard deviation higher over the long-term mean, which is 15 times. Indian markets usually trade at a premium, 19 times. And when you compare Indian markets with emerging markets, so think of yourself as a global investor, you will look at India. Why should I look at India? Why should I not look at China? Why should I not look at Indonesia and several other countries? What I'm showing here, that Indian markets typically have a 50% premium to emerging markets. You don't do that, and this is a long-term average. This is a fairly long-term average. You generally pay 50% higher to the Indian market, and which last year went to 100%. Even now, it's Indian markets trade at a 70% premium to global emerging peers. This is something I can quickly move from. Bond yields are inching up. Yes, this is again something I just wanted to show. Last year was 1 year when we saw the maximum amount of outflows. Indian markets still went up. This year, things have returned. FIIs are coming up in a big way. This year, we've seen the maximum amount of flows that have come to the Indian markets ever. But what we do is this. I'm looking at FII flows then versus FII flows now. So this is a 20-year chart of FII flows. So some year you see, wow, FIIs put in a lot of money. Some years you see FIIs sold off a lot of money. Importantly, what is happening is, as a portion of their portfolio, FIIs are selling less and less. Let me make that clear. Suppose you have a 10,000 rupee portfolio and you sell 2,000 rupees of it. So you've basically sold off 20% of your portfolio. Now imagine you have a 1 lakh rupee portfolio and you still sell 2,000 rupees. Basically, you've just sold about 2% of your portfolio. So overall, what is happening is, FIIs as a portion of their asset under custody are selling less and less. See, 20 years back, the FII portfolio looked like 30, 40, 50 billion dollars. Today, the numbers are huge, hundreds of billions of dollars. So when you sell, even if you sell, of 30 odd billion dollars, market impact is meaningfully lower. And yes, this is something that has happened in the last 3 years. Retail participation in the markets has actually started going up. So what you see here are retail flows the previous 3 years, previous 5 years, and this is the last 3 years. Retail money has come up in a big way in the markets, and which brings me, since I put this background for you, global environment is slow, US is still holding up. Just to summarize, Indian markets have done well reasonably. They trade at a premium based on consensus valuations, and retail flows have come up in a big way. FIIs were sellers, but now they are sort of buyers in the market. I'm talking about 3 themes which will push India into the next decade. I'm talking about digitization, manufacturing and investment, and of course, consumption. Mr. Thakkar, my previous speaker, also spoke about this. This is how Indians are leaders in soft infrastructure. So our previous speaker said that money transfer in India is actually easier than in the US. UPI works faster, cheaper, actually without cost in India, and at what is called population scale. It works for the entire country than anywhere else in the world. No other country has something like that Indians have today. Digital transactions today are the highest in the world. Aadhaar is the largest biometric mapping in the world. Indians, we use the largest amount of data across any country in the world, both in a total level because we are such a large country, also in a per capita level. That is interesting. It's not just Indians are 1.4 billion people and therefore we'll use more data than everybody else. But we are using more data per capita. Now, if I have to ask you, where do we use this data for? Any guesses? Actually, it's YouTube, but Reels come close. We are learning. I agree. But on a serious note, we administered COVID. We did 2 billion vaccines. No other country in the world has done it. Again, you will tell me, okay, this is because of population, but our vaccinations were transferred in a regulated manner. If you had vaccine 1, you could not go 1 week later and say, "Mere ko vaccine 2 chahiye." Will not work. Your vaccines will only come up after 6 months. In short, the COVID setup allowed us to do this at a population scale. Every number here is going up. I'm just showing you various proxies except cost. Cost of data in India is going down. Mobile, wireless, more and more people are using internet for Reels, for YouTube. UPI is going up. IMPS is going up. And that is leading to an amazing startup ecosystem. 108 plus unicorns. Of course, there has been some devaluing now in some of the startups, but overall 108 unicorns. And now we don't have just unicorns. We have soonicorns. Bal jayenge, jaldi ban jayenge. And then we have growth stage. So we have so many of these companies now which are coming up in a big way. And I fully agree with what the previous speaker said. We should be using the cash that's coming up with the large companies to support even more of these. And now I will speak a little bit around services exports. Services exports are shooting up. Services today for India are not just IT. They are business services, transport services, travel, insurance, and others. So if you see the tick there, so we are having a very curious scenario here. Technology is becoming more and more enabling. You can easily do a video call. We just had it previously. And in that, you're also having protectionism. So there was a recent Axis Bank report which basically said this. So are these structural factors, countries are not willing to take others anymore because they're seeing slower growth, but technology is doing better. If you bring these two together, India is becoming the office of the world. India is literally becoming the office of the world because it provides such high scale. And yes, this is the number. So IT services today, and then these are some of the estimates that we have, they could double over the next 30 years. IT services now in India will not be just looked at what is the size of the IT sector now, but it will be how big is the Indian IT sector as a part of the global IT sector. That's how big the Indian IT sector will become. MSMEs today we have huge. These are the things which will become bigger going forward. I just want to point out 2 parts. One sec. Again, CapEx. So in terms of private investments, so 10 years back, if somebody would have asked me what is going wrong in India, private corporate CapEx is not happening. It was happening, but not at the same point. So what has happened in the last 10 years is government has taken up a large share of the investments. although they cannot cross the private sector. So this is how projects under implementation under the private sector has gone up. Under governments have gone up, even as private sector has slowly slowed down. But now we see something improving. In the end, private sector corporate capex is also rising. During this time, one other thing that I wanted to point out, of the total expenditure of the government, capex expenditure is rising. That's the best part. Otherwise, a lot of this investor was only, a lot of this expenditure was on revenues alone. And capex to GDP, what is this basically? Out of the 45 lakh crores that the government is spending every year in the union budget, 22% is going to capex. That did not happen earlier. Even 10 years back, it used to be 10%. And that was on a much lower base. So 10 years back, our government used to be, the union budget used to be around 17-18 lakh crores. It was 10% of that. Today, it is 22% of 45 lakh crores. You guys are better at math than me. So basically, what are you seeing? You are seeing a lot of electrification. You are seeing a lot of roads, which lead to the automobile theme as well. You know, if you want to have enormous numbers of cars on the roads, you need to have great roads, right? This is what you're seeing here. Yeah, we have the second largest network of road in the world, 64 lakh kilometers. The highway construction speed, you know, I remember 10, 12 years back, it used to be 10 kilometers per day. Today it is 30 kilometers per day. That's the amount of pace at which we are building up highways. Rural road connectivity is at 99% today. Connectivity increases, business increases. Connectivity is, you know, I already spoke about soft infrastructure. This is hard infrastructure. Rural road connectivity. Annual road lading is at 1.4 billion tons. 148 airports. Airports today are as crowded. I'll give you one statistic. The growth in passenger traffic last year was 4x the previous year. Yeah, I know pandemic was there, but 4x. So, and of course, there are so many other things. And this is that story about how our population will basically change. So we will have actually 60% of our population in middle class. Imagine what they will do in terms of spending. So we have done some numbers here. This is how we will cross $5 trillion, dollars, how we will cross Japan and Germany. If you assume a growth of about 6.5%, which is not at all, off the charts. If you assume a growth of 6.5%, the nominal GDP will grow to about 6.9 trillion by 2032 from the 3 trillion that we have today. If you assume slightly better, 7.5%, we are going to 8 trillion. What does that mean? The average Indian today makes 2 lakhs a year. That number will go to 5 lakhs a year. But what happens is when your income rises so much, you don't spend it all on food. You start buying other things. So what will you do? This is what you do. Today, about 46%, okay, when the current inflation basket, we all see inflation is about 7.5%. So inflation basket, when it was put up, about 46% of Indian spend was on RKM, Roti Kapda Makan. Yeah. So that is non-discretionary spend. ये तो करना ही पड़ेगा आपको, right? What was not there was discretionary spend. Discretionary spend is what you decide by where, which school, what travel, which vehicle do I want to buy. That number, so RKM is slowly coming down. Okay, over the last 10 years, it has come down by about 2 to 3%. Discretionary is sort of going up. We are assuming that over the next years, it will go like this. But if I assume even the base spending here, that CAGR today, the gross discretionary spend, you know what I'm doing? I'm just taking the numbers. How much will Indians spend from a discretionary perspective, from a choice perspective? That number will be by 2032 about $2.7 trillion. 3 trillion is our GDP today, 2.7 will be discretionary spending. You can imagine what that will do to cars, you can imagine what they will do to electronic goods, any kind of activity in this space. You can imagine the spending that Indians will bring into the world. No large MNC in the world, no large company in the world, no country in the world can afford to ignore this market, which will spend $2.7 trillion annually. You can't ignore it. You can imagine the kind of business that will happen in this country. This is one part of why it is going to be India's decade. Smartphone users, car users, I can keep giving numbers here. Let me come now to the challenges at the end. Yeah, the story will not be good if I only give the good parts. So here's the here's the not so good part. This is India's trade, not as growth, not as India's exports, how they're growing, but India's exports as a percentage of the world. So we will do better only if our share of global trade increases, not just our trade increases. Imagine we grow at 7%, the world grows at 7%, no big deal. So from here, 1970s, all the way till 2000, for 30 years, that did not change. So we were about 0.5%, between 0.5% and 1% of global trade. Nothing really happened here. In the last, between 2000 and 2010, 10 years, we suddenly started moving up. So we became a bigger partner in the global trade. We actually grew at the expense of others. That was the great news. You remember the growth period during that time? So it used to be 9% plus, 8% plus. That was the growth period. This is what helps businesses when you are doing better than the world, much better than the world. But look at after 2010, the overall number remains the same. So what has happened is, in the last 10 odd years, our share of global trade has not really increased. While we are doing well, while exports are doing well, I showed you so many numbers. This is merchandise trade and not services. We are not doing that better than the world. And the second challenge, I wanted to show this. Even at the world level, after global financial crisis, overall trade is actually going down. All of you must have read something like deglobalization. That's what it is showing. So the last time we had the highest global trade ever was 2008. After that, it has not touched those levels. So the world trade is actually slowing down and India's trade is also slowing down. One other point I wanted to make, this is complexity of economies. So it's not enough if you trade with a few countries. If those countries go down, you go down. So a good country, a good trading economy must have trades across a maximum number of countries in the world. That's what we are seeing here. So this is economic complexity. This is the size of the economy. So this is China, this is US, and this is India. It's great in terms of size. We are very big, and these are logarithmic charts, by the way. But if you look at complexity, there are so many countries, largely European countries. You can see, Korea here. Japan here. You can see Germany here. You can see UK here. There are so many countries which are more complex than us. In other words, our trade has to go more complex. It has to go to far more countries than we are doing now. My second challenge, digitization remains fragmented, very fragmented. Some of us are doing very well, absolutely. We are using technology to the best use. Others are seeing reels. So technology is quite fragmented, and a large section of our population is not up to the mark in terms of this digitization revolution that some of us are seeing here. Which is why you're seeing this, you're seeing these scenarios where we use technology like the best in the world, UPI is the best in the world, yet across a nation, across a sample of 70 countries, Indian students have fared the worst in pandemic. Students didn't go to school for about 1.5 years, and the impact on Indian students has been the worst. Bhai, humne kya kiya tha aisa? But that's what has happened. So this is the digital divide that I'm talking about. And then of course climate change. So we have done something very interesting here. We've looked at 100 years of data, literally 100 years of data, and basically said how climate is basically changing. And what you see here is, aap pahad dekh rahe ho na? So every time temperature has basically started shifting. The first chart here, these are the first 40 years of the 20th century. This is where we are today. So every time temperature has basically started shifting, even 1 degree shift in global temperature can lead to unspeakable consequences. This is something that we have to worry about. Of course, window of opportunity. We have the youngest population in the world. We have a demographic dividend that will be there till 2055. That's the positive part. And our primary consumption is amongst the lowest in the world per capita, which essentially means we will need more energy. We will consume more energy, which means we will need more capacity. And this is the last. The world's climate fight will fail without India, because India will need to achieve its climate targets if the world will need to achieve its climate targets. Now, net zero targets given by our Honorable Prime Minister as this: 500 gigawatts of non-fossil energy, 50% of our energy must be from renewable sources. And this is by 2030. We should smell money here. $10 trillion. We will need $10 trillion to meet these targets, 150 billion every year, starting from next year or so. Of course, we are not meeting those targets. The world has to see this opportunity and imagine the kind of investments that will come to India. So on that positive note, I will stop here. I'll just give you one more number. By 2047, our chief economic advisor has said we should go to a $20 trillion economy. Of course, yeah. Thank you. We'll go to the sky. Thank you. Jai!